Hey, what's up, everybody? Happy Friday. Got to stay positive. You always have to stay positive. I have a lot of positions on right now that are against me, but as I've said so many times, the only easy trade was the last trade you just closed out at a profit. I expect every time I go into a trade that it's going to initially go against me. So, it just comes with the territory. Got to stay positive at all times. Every single closed out trade of MMT Trader Report has been a profit. I'm up 20% last month in January on my Forex trades. You got to stay positive. You just have to stay positive. The market moves around. It's constantly in a state of flux. It goes up, it goes down. It's just numbers bopping up and down. And we know how to extract profits from that. But you have to stay in control. You have to stay positive. And I spoke about language yesterday. You can't start saying stuff and putting words in your head like I'm getting killed, I'm getting crushed, I'm getting destroyed. The market is eating me up. I mean, you can't say stuff like that because that just puts in your subconscious mind a very fearful, negative attitude, and it affects your behavior. It affects the way you see what is going on. Remember, nothing is ever as bad as it seems, okay? And nothing is ever as good as it seems. You gotta stay right there in the middle. Anyway, a couple of things I want to talk about here. Yesterday, for MMT Trader subscribers, I sent out an email with regard to Mexico, some thoughts and comments I had about Mexico. Namely, that the Mexican central bank has now hiked interest rates to the highest level in 8 years. And of course, MMT explains that this is bearish for the currency. Yes, short term, the zombies go in because they've bought into this belief that rate hikes are bullish for the currency, even though they probably understand that rate hikes for a currency debt instrument, like if you're talking about treasuries, when rates go up, the price goes down. There's an inverse relationship. Same thing, a currency, I've said this a million times, a currency is a debt instrument of zero maturity. Same behavior there. Anyway, here's a chance to see MMT in action. All right, for those of you who are still skeptical, I don't know why you would be, but I'm saying that the peso is going to go down. It's going to accelerate its downward decline. Yesterday, I put out a recommendation to buy dollar peso. It was one of my few long dollar positions right now. I said buy dollar peso at 20.30. That's 20.30 peso to the dollar. We were trading above there when I put out the recommendation, but it got filled last night, went slightly below 20.30, but now we're at 20.37. All right, and you're going to see, I'm going to be right again, that the highest interest rates in 8 years, peso's going to go down. All right, now, another thing. The United States economy is very linked to Mexico. Just ask Donald Trump, right? He's like, we got $50 billion a year in trade deficit with Mexico. Rate hikes in Mexico, which are inflationary, right? What are rate hikes? Price setting higher. They're going to translate into inflationary effect. That's like exporting inflation to the United States to some degree. There's also another thing going on in Mexico, and that is the government this year stopped subsidizing gasoline prices. They've been doing that forever because Mexico is an oil producer. Gasoline prices have skyrocketed 20%, causing actually riots throughout Mexico. All right, so that's another inflationary impact to the Mexican economy. So you have the rate hikes, you have the end of gasoline subsidies, and this is also not only going to affect the peso, it's going to affect inflation rates in the United States, which will affect the U.S. dollar. All right, so I wanted to talk about that. Now, this is pure MMT in action. You're going to see, just like if you go back to last May, my videos, May, June, something like that, when the Russian central bank cut interest rates, and I said the ruble was going to rally, and it was like, what, around 65 back then to the dollar? And yeah, there was a brief, very short, little tiny spike up in the ruble, but where's the ruble now? 58, 59? So the ruble rallied with the rate cuts. Why? Because rate cuts are price setting lower. Okay? Lower prices, less inflation, your money buys more. It is reflected in the foreign exchange market as a higher value, exchange value of the currency. Your currency buys more. And what's so hard to understand about that? The stock market is against me. Although I own stocks, and I've been selling out individual stocks that I have had on now for a while at a profit, but I am short the S&P, and it has been a tough position, and it is now a workout position because the flows are positive. All right, I miscalculated a little bit because when I saw in the fourth quarter the negative year over year in the fiscal flows, and I said it's because of a drag by Medicare, which was subject to cuts in the last budget agreement in last September. I forgot to really think about the fact that we are in a secular rise in these entitlements just because the baby boomers coming of age to retirement every day. More and more people sign up for Social Security, for Medicare, for Medicaid. So these things are constantly growing. These are like and they're non-discretionary spending. So the government has to pay these things, and the payments just keep getting bigger and bigger and bigger. It's like a giant safety net being rolled out, and the safety net just, it's like the tide coming in. It just picks everything up. So I will never do that again, I'll tell you that. So now this is officially a workout situation. Although there are some things that I have been pointing to which are negative, like I talked about the drop in gasoline demand, and I'm gonna say something about oil in a minute. I talked about the slowdown in loan growth. These to me are indications of demand, and they're slowing down. Now, oil. Everybody loves to buy into a story, right? The story now is that OPEC is really sticking to its cuts. So we saw what happened on Wednesday. You had a 14 million build in crude inventories. You had a pickup in gasoline demand for 1 week, but if you look at the 4-week average of total gasoline product supplied to the market, that's demand, we're down at a 5-year low. 5-year low. Okay, so you had, a blip up for 1 week. So everybody jumped in long saying, OPEC's cutting. Fine, they're cutting. We have inventories, record inventories in distillates. We have gasoline inventories up to the highest level in a year. We have crude oil inventories back up to almost the highest level in a year. We have gasoline demand that is collapsing. We have inputs to refineries. Remember, supply is one side of the equation. Yeah, OPEC may be cutting, but we still see the numbers don't lie. I mean, refinery inputs, crude inputs are falling way, way down. So the refiners are just not buying as much crude. And we see inventories building up, which, by the way, these oil inventories, that's what showed up in the fourth quarter GDP report. Remember, we saw gross private domestic investment. That was the big contributor to the 1.9% growth. I mean, if we didn't have the inventory increase, we maybe would have had 1% or less growth in the fourth quarter. But that was all oil inventories. So raises the question of whether or not, we're going to at some point see an inventory overhang. You got refiners cutting back on inputs to their refineries, right? You got gasoline demand collapsing. So yeah, OPEC might be cutting, but where is it showing up in the numbers? That's what I want to No. All right, so everyone buys a story. You know, sometimes these stories are, fantasy stories. The numbers don't lie. So let's take a look at what happens today. I'm long euro against the dollar. I am long New Zealand dollar against US dollar. I am long British pound against US dollar. I am short dollar yen. Okay, sold it yesterday in the 113 handle. And what else? I am actually long dollar Canada, which dropped down today because they had a pretty good jobs report. But I think oil prices are going back down. That's why I'm long dollar against Canadian and I'm long dollar against Mexico. Let's see what happens. See you later. Bye-bye.